everyone, and welcome to the Technical Analysis Market Rep on Friday the 9th of October. So this week we saw some real turmoil with the COVID-19 playing havoc in the White House, and that was a bit of a prelude as to what we can probably expect over the next month with the elections coming up. Like just that outbreak in there sent the market spiraling earlier in the week. They fully recovered, so the volatility is certainly going to be there. We've seen some of the market moves pretty big, especially on the indices and the dollar index. So we'll jump straight in and have a look.
Okay, so we'll start out with the Aussie USD on the daily chart. We can see that it had this big move down up until the roll reversal zone at around the 70. We know it's a pretty important zone and it's had a good bounce off it. Now we can see it's come up, tested the 20 moving average, and it's come back down now. It's about to have a reload. If we draw a fib of that level, it's going to be somewhere between the 38.2 and the 50, which is a pretty good pullback. And now it's trying to get above those moving averages again. So if we go back down to a 1 hour time frame, we can see that it's already making a series of higher highs and higher lows, so it's got the lightning bolt effect that we're looking for. If we get a break above this 200 here, we can see that it's testing the 20 on the way up, which is great, but we do need to see this break here. So we need to see a level above the 71.80 broken, at least on a 1 hour time frame. If it does that, then we can track it up until about the 72.50, which is the next logical point. It does seem to travel in the 50 pip increments still at the moment, and it has been proven to be a pretty good strategy, really. Like, we've been doing that for quite some time now and getting reasonable results. So aim for the 72.50 if we get a break above there, but if we get a smaller time frame change of trend to the downside, so if we start to see a series of lower highs and lower lows on the 1 hour chart, and then we can see the change of trend happening, we'll short it down to around the 71 cents and then to the 70.50 if it continues with the weakness. We'll move on now to the US dollar Swissy. On the daily chart, we can see that a very clear roll reversal area here. It was resistance right through here. It's proving to be support now. It's had a bit of a move down and then earlier in the week, and now it's consolidated around this level. We've had 2 or 3 days now of pretty solid consolidation. Still trying to stay above the 20 moving average, which is pretty important, but the level really around that sort of 91.70, 91.50 area, anywhere in that zone, is proving to be a bit of a handful to break down. And that's really good because it means that if we get a smaller time frame change of trend to the upside, which we'll go to a 4 hour chart now, we can see here that on the 4 hour, it's actually attempting to do just that. You can see we've got the low and the high and the higher low. Now, it did attempt to make a higher high, but it was failing to stay above the moving averages here. We want to see price get above this level again. Now, if we get a new high on the 4 hour chart and we can consolidate this higher high and higher low sequence with closed candles, that's pretty important. I wouldn't go any lower on this time frame. I think the 4 hour one is probably important because at key zones like a daily roll reversal at a very, very important stage in where it's at from a technical standpoint, you want a 4 hour confirmation, not a 1 hour confirmation, because you just need that more significant time frame shift. So what we want to see here is a new high made above this 92 cent level. If we get that, then we've got the lightning bolt effect that we want on the 4 hour, and we can expect that the roll reversal zone on the daily will hold up, and it does have plenty of blue sky in front of it. So at the very least, we're probably going to get, close to 80 pips up until the 93 level here. We can see that's the first point of real resistance. So it's a pretty good trade, and, the stop loss is about 60 or 70 pips. So it's still better than 1-to-1. And in a scalping environment, which is what we're in at the moment, we would definitely look at that ratio as being pretty good. We'll now move on to the US dollar yen. We haven't looked at this one in a little while because it hasn't really done a lot, but we can see here the last few daily candles have been very, very positive. So let's take a look at this one. We'll break it down. It's been hovering between the 105 and the 106 just in the last few days. It's been a pretty big move up, and you can see here we've got the higher high and higher low sequence on the daily chart. And most importantly, the last 3 days has seen it push up above the key moving averages. So we're above the 20 moving average and above the 50 moving average now, which is really good signs for this one. It hasn't done a lot, but now it is starting to move, which is good. Now, what we can see here, and I guess probably one of the problems, is it finds itself at a very, very strong point of resistance. The 106 has been proven to be very, very strong in the past. You can see the touches here and here. So it's going to take a little bit of breaking, and what that means is if you're not already in, it's going to take another bit of a change swing to actually get into this trade, because you don't want to be entering right at this level because you're right in the face of resistance. When you are entering long or short, what you don't want in front of you is a big roadblock straight up. So this one is providing that big roadblock. So we need to see a break above the 106 and it's got to be on a daily chart as well, so you can't be even on a smaller time frame. We must see a daily candle close above the 106, and probably a 106.10 would be sufficient. And then we could probably make a case for it to go longer into the 107s. We can see on a smaller time frame that the momentum is certainly strong as well. You're getting a good series of higher highs and higher lows. So what you might want to see is potentially a scalping opportunity. It might come down to the 20 moving average here. You can see it's respected it all the way up on the 4 hour. So if you're looking for that scalping opportunity, which is all we're doing at the moment, it'll come back to the 20, and that could be a reload zone, and that will potentially test a 106 again. It's only going to be about 20 or 30 pips, but still, like I say, in a scalping environment and on a pair that's not moving extraordinarily heavily on a daily basis, you would definitely take that as an opportunity to scalp. Now, like I say, we need to get a break above the 106 on a daily chart. It's got to be a 106 daily close or above to convince us it's going to go to the 107. That is the next logical point, and definitely one that you can aim for if it does get that break. But for mine, I would still play the smaller numbers and trade that 106 to 105.50 if it goes down. And if it does indeed break up above the 106, that is a significant break. So the 106.50 to 107 are the good targets. But I'd be probably targeting the 107 if we get that break above the 106 on a daily, because it's got that move in it and it can do 100 pips fairly quickly once it does start to move. So we'll move on now to the Aussie 200. We'll look at it on a daily chart, and you can see here that it bounced off very, very strongly off that support level around that 58.50 mark. Now, it started out with a hammer candle earlier in the week, and you know what I think about these sort of candles at really important points of support and resistance. So it was a really good timely candle, and it obviously coupled with the budget news that we had in Australia earlier in the week. It was obviously very positive for the market, and it's reacted as such. But it did start out as a technical at a support zone, which it often does. So that's so important. The preceding candles have all been very, very strong. You can see now we're pushing up into the 61s. It's found itself at a very strong point of resistance now, though. Okay, so it's got some work to do now. It's sitting around that sort of 6100 flat at the moment, but we can go through here on a daily chart, and you can see how strong this area is. It's going to be a really, really strong point of resistance for it. So it's going to do some serious pushing to get past here. It's also the 200 moving average, which has proven to be a real obstacle in the past as well. So that coupled with a really strong resistance level, and you could definitely see some profit taking this week. Like, it's been a really, really strong week. Quite often when this does happen, you find that it does pull back throughout the day on the Friday, where a lot of profit taking takes place. So I would be looking for shorting opportunities on this one. Probably a really short change of trend on a smaller time frame, like a 15-minute. Definitely scalping. I wouldn't be doing anything more than scalping again on any of these until the election. So look for the scalping opportunities off the resistance now. I don't think we could see a case for it breaking above this resistance and going long from a technical standpoint, just purely because of the day it is at the end of the week, and also that it's had a pretty good move and it is very, very strong resistance. So the likely trade and the more consistent one would be for the short side. So look for a smaller time frame change of trend. Go to a 15-minute chart or a 30-minute chart. You can see that we haven't got it yet, but all we need is a series of lower highs and lower lows. That can certainly happen throughout the trading day or into early London and potentially late London, and you could get that trade. So the place you'd be looking for, I'd be looking for only 50 to probably 70 points on this one. Every 50 points is proving to be a pretty consistent level. So, 59.50, 5900, and if we have a bit of a down night in the US, it could definitely get back to the 58.50. It doesn't take a lot to move this, and it does get basically maneuvered by what's happening overseas after market. But in our session today, I would probably expect profit taking would be on the cards, or at the very least consolidation. So it's probably not going to be any long opportunity. Look for the shorts on this one, and trade it for that sort of 50 points. You might get that throughout the day, if not during our trading session, maybe in London and early New York. So the last one we'll have a look at today is the EURUSD. This has been one that's providing some trading opportunities because it's been hovering in the zone. But again, it's finding itself now, it's gravitated up. This is a daily chart. We can see it's gravitated up here all the way to the break of that channel that we've been talking about for a little while. It finds itself at a very, very strong level of resistance now. And it hasn't really done what we would have probably expected it to do if it was going to go long and blast through this. You can see the last week's trading has been up and down, but sort of in a very tight range. It hasn't had a really big range of movement, and we know that it's obviously at resistance here, but this was a pretty strong support level right throughout these daily candles here, and now it finds itself at that place and it's struggling to break through. So, you know, knowing that we've got that information at hand, the logical target for this is to sell off the resistance and aim for the 117. We know the 117 is a very strong level. There's no worries about that. It could break it. It's broken it previously, as you can see. But what we want to be doing now is probably aiming for the scalping opportunity, because that's all we're looking for. It's going to require a pretty small stop loss, because it only has to be above this previous high here. And then we can aim for the 117 for the short side. Now, if it does go long, what we definitely want to see is a 4-hour candle break above the 118. And if it does that, it's basically broken straight into the channel that it was trading in, and we can start looking at those previous channel zones again. So we're going to start looking, we know that this was trading between 100 point moves or 100 pip moves once it was in that channel. So that puts the 119 back in play. But yeah, again, I would rather the short side, because it makes more technical sense, and it's got a little bit of work to do before it actually even gets to inside that channel. So what I'm basically saying is there's trading opportunities almost straight away on the short side, but it's got a little bit of proving work to do to go long, because it has to break up above a level first, and then we want to see a retest of that level. We wouldn't just be taking the first break. So the easy trade is the short side, and try and aim it to the 117. If it breaks the 117, then again it could easily reach the previous lows, and we know they're generally fairly comfortable to reach. So what we want to do, we'll keep an eye on it, go to the 15-minute charts, or even on a 1 hour. You can see we'll do that now on a 1 hour chart. It's not really trending in any direction, but what it is giving us is the opportunity that if we see the lightning bolt effect, you can see it's at 117.58 now. If it gets below that 117 sort of 35 area, it's confirmed the lower high, lower low sequence that we're looking for, and then we're going to aim for the 117 or the 1650. But 117 would be the logical target, and the one that's probably going to reach in a bit of a hurry if we do get that change of trend.
So I hope everybody's had a great week's trading. We've certainly had some volatility in the markets. Hopefully you were able to catch some of those pips, and I look forward to seeing you all next week. Thanks, everyone.